Hello and welcome. You're watching Business Today Television. I'm Tanya, Aneja, and joining me is someone who needs no introduction. He's very popular on social media. He keeps sharing his love for Indian markets and his favorite food. With me is Mr. Gurmeet Chadha, managing partner and CIO at Complete Circle. Thank you so much, Mr. Chadha.
Thank you.
First of all, I know you have a very busy schedule, but thank you so much for taking the time out and joining us here on Business Today Television. So, Mr. Chadha, I want to begin by asking you, and actually, talking about one of your tweets only because you are very popular on Twitter. So, you tweeted that Nifty is up 19 times since 1997, and we still keep asking market kya lagta hai. So, I'm not going to ask that. I'm not going to ask him market kya lagta hai, but what if FII flow reverses, or June quarter earnings season doesn't live up to the street's expectations? So do you see a major correction happening, or it's still a buy on dips markets?
I think I'll go with the latter. I firmly think we are in a buy on dip zone. And on FII flows, May and June, we have already got $10 billion, right? So this has happened after 2 years of aggressive selling by FIs. And I think the market, actually, I have not seen market so resilient despite, more than 3 lakh crore was sold by FIs, and any other period in the past, we would have been down 30-40%. But I think that's thanks to retail investors, domestic flows, SIPs. So I do not see a major correction. I mean, nobody knows actually, but unless there is a big geopolitical event or Fed really hikes like another 100 bips, which looks very unlikely. Some consolidation always happens when market moves up, in so quickly in short period of time. But that's the nature of the beast. I mean, it gives, and I keep saying this, if you miss the best 10 days, your returns for the year are flat. So you got to be in it. It's that. So life has happiness and sadness, right? Equity market has drawdowns and upturns, right? So you have to live with it. And I think the earnings will be, the market is not factoring in huge earnings. So market expects IT companies to be soft. So you see IT stocks haven't done as well. Market expects chemical companies to report slightly somber numbers. So that's not getting, even the chemical stocks with the exception of PI is not doing that good. Market expects banks and auto to do well, and you see bank Nifty at 45,000. So I think the market is also differentiating. So I think the focus should be what will do well rather than focusing on when it will go up, when it goes down. Nobody knows.
Okay, absolutely. And you also tweeted that I don't know what will happen to Russia. I don't know whether Fed will do more hikes. I don't know where Nifty is headed. But I research hard on 25 to 30 good businesses, interact with management and all. So tell us about, a few good businesses.
See, as I said, there is a saying in the market, control the controllables. Right? So what Russia does or what Fed does is right. There's no point doing that. It does impact markets in the short run, and it's not that the first time such external events are happening. I mean, you go back 20 years, we have seen wars and Lehman crisis, COVID, everything we have seen, right? So I think, we have a basic parameter. We have a framework where we evaluate. I'll talk about that first, and I'll come to give examples. Again, with a disclaimer, these are not recommendations. So we evaluate companies that is this company growing at, let's say, 18-20%. Right? So nominal GDP growth is 12-13%. Is this company beating that by 2, 3, 4, 5%, right? So that's our first filter, which means can the top line double in 4 or 5 years, right? That's the first filter we put. The second filter we put is this growth in top line happening with expanding margins? It's just growing without really doing any value addition, right? So for example, just since you asked, for example, Maruti in 2016 used to sell 8 lakh cars. Today it will sell 16-17 lakh cars, but the margins have dropped to single digit. So Maruti, if you see, last time it became 10,000 was 2017. It's come back to 10,000 rupees now in 6 years, right? So volume growth did not translate to shareholder capital growth unless there is good margins, right? So for top line to grow, the margin should also be steady, or it should expand, if not diminish, right? Uno Minda, since I gave that example earlier in the part of the show, the kit value per car went up from 2,000 to almost 25,000. So a 2,000 crore market cap became 32,000 crore market cap in the same 6-7 year period. Where the original, the reason is then, so for top line to grow and for margin to also expand, the underlying is innovation. Right? You need to continuously do more value addition in the products you offer, services you offer, tech you use, forward backward integration you do. Right? If you are a pharma company, what are the new molecules you are commercializing, innovating, researching, right? So whether you are a pharma company or an auto company or a power company or look at Reliance. Till the time it was an oil and chemical company, the share price was struggling. Today 50% EBIT comes from Jio and retail. Right? It's a great turnaround. It hasn't happened to NTPC or some of the other power companies, right? So the core DNA for the first two to happen is innovation. Right? So we call it, in our language, you call it digital compounding, right? Use of tech, use of innovation to compound, right? And of course, then the fourth is good governance, right? Good return ratios, and look at free cash flows. So sometimes there's a lot of gap between reported profits and free cash flows. Right? That's what so if companies like generating free cash flows year after year, and that same cash flows are getting reinvested, right? I think that's a perfect virtuous cycle to get into. So we like, so a lot of themes we like, and we are very sector agnostic, right? So as I said, we like Reliance for the way it is digitally compounding. To me, Bajaj Finance is as new age as anyone else. We like some of the new age lenders like Poonawalla, FinCorp. There are a lot of companies now which are creating credit in remote areas. India only had the formal banking limited for 10-15 crore people. Suddenly you have 50-60 crore people who are getting formal banking. They are eligible for credit, right? So guys like Equitas, Credit Access Grameen, they're really going to the rural India, Bharat, to give credit which was earlier not available, right? So that is why you are seeing credit growth at whatever rate you are seeing. So I think that is something very structural there. We like a lot of companies in the branded foods segment, right, which are really innovating and doing premiumization. Right, so look at something like a Tata Consumer. Right, so they're getting into pulses, dry fruits, breakfast cereals, beverages, water, coffee. So anything and everything. So I keep saying that what has happened to a tea, coffee, or a salt will happen to everything on your kitchen shelf. Everything will become branded, right? So that's premiumization, and they're using a lot of digital channels to innovation to do that. Auto we discussed, right? Energy is another space I think which will see massive transition. So there are guys who are into ethanol, there are guys who are getting into hydrogen, there's somebody into EV charging.
And what about sugar companies?
Sugar is basically very cyclical. I would prefer somebody who has the technology for ethanol versus somebody who's producing ethanol. Right, so something like a Paraj Industries, or so it's, so they can make first generation, second generation ethanol. They are into compressed biogas. They are working on zero discharge now. So it's an enzyme based manufacturing and research company, right? So again, more innovation. So my core thing is that the company should constantly innovate, right? Even if you're doing very limited things, just keep doing it better and better. So that's our style of investing.
Okay, innovation is the key, I guess. Okay, talking about broader markets only, Mr. Chadha, BSE mid cap and small cap indices, they have nearly jumped around 14% on a year-to-date basis. So what's the reason for the excitement that we are seeing right now? Whether it's mid cap, small cap, they have been performing really well.
I think one is flows. Second is, as I said, not all mid and small caps are doing well. The index is reflecting obviously a sharp movement. But so one trend which we are seeing is that institutional money is now going beyond the top 100 also, right? So if there is good company, good governance, I'll give you an example. The largest tile company in India is a mid cap. The largest ethanol play is a small cap. The largest depository is a mid cap. Right? So I think we should not bucket ourselves into large cap, mid cap, small cap, right? So the company might be large in the sector in its operating, but it may be a mid or small cap. Look at QSR. The entire QSR, you add Westlife, you add Jubilant, you add Burger King, you add everything. The entire market cap is 80,000 crores, less than Cipla. Right? So I don't think so Westlife or Jubilant you can call them as mid cap, small cap. You're calling them because of the market cap classification, right? Right, but Jubilant is, there are 1,200 Domino's stores now, and Westlife again is talking of 200, 300 stores every year now, which is the McDonald's, the chain which runs McDonald's, right? So I think you should not bucket yourself with, see where the opportunity is. For example, I'm as gung-ho on ICICI Bank versus what I'm gung-ho on IDFC First, which is a relative, or a federal bank, right? So see the opportunity, and then that opportunity you can play through different players in that sector, whether it is large, mid, small. That is my market cap definition, right? So I think the price action does suggest that we are in a solid run. I've not seen this kind of inclusive movement. It's happened after a while. And that is why I said in the earlier part that I think this is more now on a buy zone. So the macros are good. We have managed inflation well. Our growth is 12-13%. Tax collection is solid. Current account deficit, nobody talks about it, just 0.6% of GDP now. Right? It's a huge thing, right? Service exports doing well. So I think once the agriculture starts doing well, the rural economy starts doing well, I think things will become better. So there is some pockets of euphoria, right? So don't just get carried away by momentum. But I don't club the entire thing as very expensive. I think there is still a lot of good opportunities.
Okay, and where are those opportunities? Because experts are really struggling to find ideas, because I have been talking to a lot of experts and they are actually struggling now, especially given the amount of rally that we have seen so far.
I think pipes is one segment, the PVC pipes, which is a huge opportunity. One, the very strong housing infra demand. Second, it's been an agri season, the first quarter. So, it's a very heavy agri season, uses of pipes and all goes up. And there has been increase in MSP prices of crops. Right, so that's one segment I think which should do well within the building material space, right? So that's one pocket we like. Even if you see the tiles, guys, I think the I was just trying to get my kitchen and bathroom done for my home. I mean, the cost has just gone, and people these days don't mind spending 3-4 lakh rupees on a kitchen or a couple of lakhs on your. So I think the home improvement theme, if you percolate it down to pipes, tiles, I think the plywood will still not do well because the timber prices are still high. But tiles, cement, pipes, cables and wires. Cables and wires is also a proxy play to manufacturing and capex, right? Because that's like a proxy to your power demand going up, manufacturing doing well, right? So I think there are enough opportunities in that space. Cement, after a long time, you are seeing almost 80%, 75-80% capacity utilization. So the supply is 6%, the demand is actually 8-9% in cement. So and the raw material cost prices have come down, which is petcoke, coal, etc. So I think that space is looking very, very good. I think a lot of these depositories like CDSL, etc. I think the stock market is doing well. More and more participation is only going to go up, Tanya, right? And it's the best proxy play to play the India equity story by buying either a depository or a RTA like CAMS or something, right? Or a nice broking or an AMC kind of a stock, right? To play the India equity culture building up. So there are a lot of opportunities. I don't see that. And also selectively in pharma. I think that's another sector which is slightly down right now. I think though if you are a little contrarian, there are opportunities there as well.
Okay, but you mentioned like cement and defense, auto ancillary. So these cyclical sectors, they have participated in the first half. But will the rally sustain like going forward as well?
No, I think there will be differentiation, as I said. Not everybody will do well.
Okay, stock specific.
Yeah, you have to be more selective now. See, once you are at 20 times earnings, right? You got to be more selective, right? And mind you, the rate cuts haven't started yet.
Yes, absolutely.
Right? And the Fed is not done yet. Might do another, right? So, and we are at least few months away before the cycle reverses. So your discount rate is high. Yes. So today the cost of not doing anything is 8%. You can do an 8% FD or you can buy a government bond for 7.5%. Right? So once the discount rate goes up, the market will not probably give a 80-90 PE multiple. As it will be as generous because it's run up. So unless the guy sustains that kind of growth, right, the higher multiple would be difficult to sustain. So don't overpay, right? So I think we are in a phase where what you not do determines your returns more than what you do, right? And so I think what not to do is very, very important right now.
Okay, and what not to do?
So as I said, don't chase momentum. Don't just buy because everybody is buying.
Okay, don't be greedy.
So a lot of new age companies, in my view, not many of them will survive.
Okay.
Right? So some of them will, without taking names, because they're still not profitable. At some point of time, you have to become, and once you become profitable, suddenly you'll be 200, 300 P. Right now, you're lost, so you have no P. So I think few of them have differentiated models this survive. So just because they are going up doesn't mean everything is very good in that space. Similarly, you made a point about some of the auto ancillary, some of the defense stocks. They just run up beyond fundamentals, right? Defense has long gestation. Order will take 8 years, 10 years to execute, right? You're valuing it now, right? But the order gets executed. Let's say you're making fighter jets, right? The order will probably take 7, 8 years for it to fructify, right? And you're starting valuing it now. So in some cases, some of the PSUs have become 30, 40 times in defense. Doesn't make sense to me, right? So just be a little careful. I'm saying I think valuation is one, FOMO is the other one. You might just see something going up, right? So a lot of loss-making companies have suddenly started doing well. Not even new age, some of the others, right? We got to be a little careful. And in banks, be wary of people who are growing too fast. The easiest thing is to lend. The difficult job is to recover. Right. So anybody who grows too fast, you should. Bajaj Finance has been an exception, growing fast with NPA. But mostly people who grow very fast, end up with bankruptcies. Yes Bank, DHFL, without taking too many names, right? They were growing very fast. So high credit growth in a good cycle should not be extrapolated. You have to check one bad cycle. This high credit growth has to stand the test.
Yes.
Right. So just there's a few pockets you have to be careful.
Okay, absolutely. And lastly, Mr. Chadha, how do you deal with the volatile markets? Because right now we are in a good mood, markets are in a good mood, but you have a lot of experience. You have been through a lot of phases, I'm very sure, like many of our, viewers, investors, traders. How do you deal with, the kind of volatility that we have seen?
So I think there are various ways. One, I don't look at the portfolios too often. I think so. One thing which can unnerve you is seeing your portfolio daily or few times a day or every week. I don't think you should, unless you are a trader, right? So I'm talking from an investor point of view. So that's one. Second, you have to tell yourself that this is a non-linear space. So Sensex has given 14% in 40 years, but only 4 years it has given 14%.
Yes.
So either it's way up or way below, right? But 70% of the time we have had a positive closing in the last 40 years, right? So invariably, if you give yourself a longer period, the odds of making money go up. Number 3, volatility is integral, not only to investing, everything in life. If you check your blood pressure 3 times a day, you'll get a different reading. You check your sugar levels. A straight line is when you should be worried in your heart, right? And if you are exercising, so I'm saying that volatility is integral to everything we do. So same is the case with equities, right? And so you should just live with it. I think this is the only asset class which, in my view, will beat inflation over long run. So our inflation, especially middle class, is much higher than 4 or 5% you see, which is headline, right? So you should ask yourself that, and this was somebody who told me this, is that what if you live longer? Everybody wants to retire early these days, right? I want to work till 40, 50, let's say 60. What if you survive till 90? So you have to rely on your savings. And that savings have to outpace inflation.
Yes, absolutely.
And I don't see any other asset class who can do that consistently over long periods of time. So I don't think so it's a choice.
Yes.
I mean, you have to be in it. Or second is a bit of real estate. But real estate, you have to be very good, which commercial. If you don't choose it, same for stocks, right? But in equity, you can buy the index. If you don't know anything, the index will still deliver, decent double digit. So I think it's a question of telling yourself that, I need to beat inflation. And for that, I think I need to be in equities for a longer period of time.
Okay, we'll wait for that. And on that wonderful note, thank you so much, Mr. Chadha, for taking the time out, for sharing these wonderful insights with us. Thank you so much. Thank you so much.
If you like the video, do like, comment, share and subscribe.